Max Burwick, thanks for coming on the show, man.
Thanks for having me.
So you've been in crypto since 2021, but I think your name and the Burwick Law brand really kind of jumped to prominence when you announced a class action lawsuit against the Hawk Tour meme coin and the team behind it. It was probably one of the most extractive launches that we'd seen in this bull market. It was the first kind of innings of oh shit, and it really launched that celebrity meme coin meta. There's a lot beforehand, but it was kind of smaller fry stuff. Can you explain what spurred you to take action against this one in particular?
Well, I would say that, we really saw the rise of celebrity meme coins. I would say even going back to friend tech, right? Friend tech, I think, is the quintessential example of what celebrity meme coins became in a lot of ways, right? Even conceptually with bonding curves, etc. Right? So we saw that for a while before, and prior to us representing the folks in the Hawk case, we had really seen and predicted that meme coins generally would be an area of litigation moving forward, and ultimately, it just mattered. It was really a timing thing, right? It just happened. People see our brand and they said, "Oh wow, we came to prominence at that time." But the reality is that we had been representing hundreds of clients before that came about. So we've been litigating for almost a year. I mean, we had already filed the biggest Ponzi scheme in crypto for the 2023, 2024 year. So there was a lot riding up to that. And it just happened to be that it was just a specific moment in time. I'm not sure if it was the first time where something had crashed that hard, but I think it was really a moment where we could say the public was more aware. And also the public was aware there might be a solution.
Yeah, okay. Well, yeah, there was that. It was probably the most, I would say, viral one that crossed over into quote unquote normie territory, in the sense that it was the Hawk Tour girls, the viral chick that for some reason just managed to take a clip and turn it into more than 10 minutes of fame everywhere. So it makes sense that was the one that everyone's oh shit, okay. What is the end goal of class action lawsuits against tokens that are perceived as unfair by investors? I have very little legal background, so if you can help break this down for me, do US courts have the power to kind of bring in either non-US citizens or people who keep their identities secret? What's the likelihood of people who lost money with something like Friendtech or Hawk or whatever coin it is actually get results from a class action?
Yeah. So, it's one of these things that I think it's a funny idea that PFPs or anonymity is something that really exists. It's I'm a military veteran. I served 01-05 in the Navy, and if the U.S. government was able to find Osama bin Laden hiding out in the middle of nowhere, I don't think that anybody's really that anonymous. I don't think a PFP and anonymizing yourself is really going to make you that hidden for that long. So I think that that's a really interesting narrative that people tell themselves. That being said, there is, as far as jurisdiction in the United States, of course, there is jurisdiction in the United States. And when we think of class action lawsuits, really, the end goal of any class action lawsuit is to provide recovery for the plaintiffs. And so in the same way here, that's the case. If it's just a securities issue, let's say here we might say there's an unregistered security that was sold, right? And that's a big question that people often have: are these unregistered securities? And in that case, if it's just going to be considered an unregistered security, then the plaintiffs are entitled to the difference between the purchase price and either the sale price or the current price that they have it. That's called rescission damages, and means to rescind the transaction. And that's a pretty common thing you see with unregistered securities. Now, whether that's going to be where this case ends up or not, that's yet to be seen. But that, of course, is the desired outcome.
Another big suit that you've helped launch is against the Solana-based Memecoin deployer Pump.fun. And this is just something from like my own perspective. For me, Pump.fun, for all of its shortcomings, like it's just another decentralized protocol that allows people to launch tokens. Clearly, a lot of people want to use it, but much in the same way that if I walk into a casino and like I hope to make money, but I expect to lose it. These other things like Friend Tech, Hawk, to limited extents, like you go along the risk curve with these tokens. Of like, I feel like Friend Tech was more of a thing that promised utility. And if you look at the chart, we're linking price and utility. Friend Tech didn't deliver much of either. But you could say that, you know, these Friend Tech promised utility, but the Hawk, LIBRA more recently, these were clearly designed to kind of extract as much money as possible. They were engineered in a way where a team hid the allocation of their wallets. They're like, hey, listen, we're going to pretend that this is way more expensive than it is, get people to buy in, wash as much money as we can from these noobs. Thank you for playing. But with Pump Fun, like that's something I feel more, for better or for worse, like defending from a crypto principles point of view of like, these guys just launched a Launchpad for tokens. So what do you see as the main kind of like legal shtick of a class action against something like Pump.fun?
Yeah. I think this has been a really interesting perspective generally in the overall reaction, crypto Twitter to us representing a class of victims here. What I would say is that there are a lot of principles that people discuss that I find that we've generally strayed from in crypto, right? And we trace this back. I remember hearing conversations about Bitcoin and borderless transactions and real ideas around financial decentralization, and that being a really exciting concept where the unbanked had access to capital in ways that they couldn't have had before. And fundamentally, we look at those principles and we look at the current state of crypto today, and we see that we have strayed, I would say, quite far from that initial narrative, right? I think that's part of what's going on here. I think there's also this question of no crying in the casino. People know what they're getting into, and I wonder really, do people always know what they're getting into, right? When we look at finance generally, and we could even throw crypto conceptually into finance, into the broader world of finance, right? One of the biggest things that create a sense of security for investors is the idea of disclosures. Do you know what you're actually getting into? Right? Do we know what the value of this thing is? And without speaking into any case in particular, we can say that in a general sense, most of the time in crypto, you don't actually know what you're getting into. And that's not because there aren't people talking about it. There's plenty of people talking about how here's a place where you're going to be creating generational wealth. Here's a place where you're going to be purchasing an asset that's going to increase in value. And so when we get back to that no crying in the casino, people know what they're getting into. I would raise the question is, did people really know what they were getting into? And who was speaking about this when they were saying how great something was going to be? And again, this is not pointing a finger at anybody in particular, but we are living in an echo chamber on crypto Twitter where we're dominated by KOLs that seemingly are really successful individuals that have done a great job in trading. They understand the market. And those are the advisors to so many different folks. And unfortunately, there are no required disclosures here. You can say whatever you want, whether it's true or not, right? And in the worst instances, those same KOLs who are providing that messaging are enriching themselves while keeping people engaged, claiming that we should all have diamond hands and be holding on, while on the other side of things, they're not playing the same game. So when it comes to questions of did people know what they're getting into in any certain situation, I would say I'm not really sure about that. I would venture to say that in the majority of my representations working with clients, and mind you, even though we have thousands of clients, I have developed some really close relationships with those clients. When we're investigating a matter, oftentimes I'll be doing interviews, finding out what happened. And these are not only, factual as they relate to the case, but they're also highly personal. And what you find is that there are two universes that people exist in crypto. There is the face that somebody, oftentimes a KOL, presents themselves as. Could be a very empathetic person, a leader, someone that is, let's say, very knowledgeable, right? But also very caring, right? Oh, I'm caring. I want you to do the best. I want us all to, really succeed here. And that's the face they wear in the front. But then when you look on the back side of that, you find a totally different person, where in all actuality, this person is a highly sophisticated con artist. And so I'm not saying that relates to any particular case, especially any cases that we're currently litigating. But what I am saying is that that is a phenomenon that I think people really should be aware of and be highly sensitive to, because taking it back to the idea of required financial disclosures, now some people could say, well, the game is rigged, everybody lies. Actually, no, the game isn't rigged, everybody doesn't lie, or else the whole financial system wouldn't function. In all reality, is the game mostly isn't rigged, and when it is rigged, oftentimes there are several investigators that are examining this and taking that apart. But for the most part, we have a pretty efficient financial system where those disclosures actually create the trust. And that's why, the US is such a great place to invest, because we have rule of law. And that rule of law determines and requires you to make disclosures accurately, or you could end up in prison with a variety of different financial penalties. So, the idea that people, again, taking it all the way back, know what they're getting into. I mean, that's a person by person situation. Did they know, and what did they know?
Yeah, no, I can agree with that. I think there's a lot of people that would just be told, like, by a text or seeing a fucking TikTok of like, oh shit, you can go on Pump.fun and make $1 million, let's go. And then very quickly realize that, like, as someone who degens quite a bit, it's not an easy game. Like, it's not something that you can just show up and be like, oh, I'm going to invest a soul here and it will become something. It's like, assume that there's a 90% chance more now that it will go to zero. Even if you know, quote unquote, what to look for. So no, I think that's a pretty reasonable case. Where do you think we should draw the line? And I mean, this is just a kind of speculative question. It's like, where do you think we should draw the line between a bad investment outcome and personal responsibility? Is there a bright line on that level? Like, can someone just be aggrieved? Can someone do something really stupid and then come to you and be like, Max, help me, I lost everything because I'm an idiot. Like, I knew as if they're going to admit, I knew what I was getting into. But yeah, where do we draw that line between, like, I got a bad outcome and now I feel like aggrieved and I could have legal recourse, and I didn't know what I was getting into and I actually need help and I deserve legal representation?
Yeah. The idea of personal responsibility is such an interesting concept. Embedded in that is a great degree of philosophical perspective, as well as, unfortunately, a lot of judgment too. I have trouble answering that question, right? And there's a couple of reasons why. In the eyes of the law, how is this going to be evaluated? And if somebody made a mistake, or if they should have known better, it raises a very interesting question, because the issue is, even if they would have known better, would they had a different outcome? Did they make a mistake? Were they just degenning into something? It goes back to the casino concept, right? I've made this statement before, and I hope people don't dismiss it, which is that you can't make the analogy that in any way meme coins are similar to a casino, right? They're not, right? If I go to a casino, the rules are well defined. There is no cheating. There's no insider at the poker table, right? There's nobody that's going to switch the deck around. The cards are the cards. They're not going to change, right? Now, my odds might not be very good. I might not be a very skilled poker player, right? But that doesn't change the outcomes, right? As in the game is already set up to be structured and played the way it's going to be played, right? But when we're dealing with certain assets on chain, and this is not just meme coins, this is in a broader sense, the market generally, right, is that because there are no disclosures as to who insiders really are on a variety of different projects, you never know what you're really getting into. And that to me is concerning. And this is, people are seeing it more with meme coins now because it's become the news and people are becoming aware of this. But for us, we've known this for quite a while. Right? When we've been researching other matters, we've seen that people that say that they weren't involved in a project, what we find on chain is actually, well, they were involved in the project, that they weren't being honest about what was going on. And so the insider issue has been problematic for quite some time. And then when you're asking about personal responsibility here, it raises another question as to, well, what was being marketed here and what was the line at which that marketing became unfair? And what was that person's position when they were making that investment? And that, to me, that's more concerning because there's a degree of, I would say, abusing language and taking advantage of people that I personally have a problem with.
Okay. That's an interesting point you've made about it not being equivalent to a casino, because that's what everyone calls it. It's like, oh, meme coins are just a casino. I would say that I think Pump.fun markets itself as being almost like the house in that regard of like, hey, we've protected against insider launches. I mean, clearly you can bundle it, but then it requires more tools from the investor side to see whether or not something is bundled or wallets are hiding certain allocations, so that you can get quite technical with it on those kind of claims. But I think that is a good point of like, no, when you go to a casino, you do actually kind of understand the fact that the game will be played the same every single time. There's 52 cards in a deck. They're going to come out in a certain order and you're going to make bets on whether or not the outcome is the same. And it's like the same analogy can't exactly be rinsed back towards buying a coin and hoping that someone else isn't going to just like absolutely rip it out from under you and you go, oh, shit, the dealer pulled out 9 kings and won. Damn it.
Well, there's more to it than that too, right? There's a different set of promises, right? And I'm not just talking about meme coins. I'm talking generally around the idea. How many times have you seen a meme where they're either talking about generational wealth? Like one of my favorite memes is the dad opening the door and he's checking on his son.
Are you winning, son?
Yeah, are you winning? Right, exactly. And there's this concept around winning and generational wealth, and I think it's something that is not only a false narrative, but it plays on a certain set of emotions that I think is highly exploitive, right? And that's not to say that investing generally. So let's break this apart into a few different ideas here and really clarify quite a bit, right? When we talk about investing and let's say how risky you can be when you're investing, generally, when you're investing, whether it's in an equity, like if you're investing in a later stage equity, much less risk. We know the company's profile. There's a greater degree of security here. We know what their assets are. And ultimately, this company's been selling a product or service for quite a long time, right? And also, we know about the revenue, et cetera, right? Right, and that's a much lower risk investment. You invest in a startup, well, now you're in a much riskier environment, and oftentimes to be successful there, you need an entirely different set of skills. You need to be able to understand, do they actually have product market fit? What's the size of the market here? Also, what kind of returns are you looking for? And there is a very tactical analysis in being able to make those determinations. Unfortunately, what we see is we take certain concepts from finance and then we layer them onto crypto without a real capability to make determinations as to whether whatever it is we're investing in is truly going to be successful, because it's very hard to do accurate due diligence. That's a starting place. But it's hard to say that all people want more wealth, right? Or greater, I would say, financial freedom, right? And I use financial freedom because for most of us, right, finances are a fairly difficult part of life, right? Who doesn't want a couple extra bucks to, be able to take somebody on vacation, to afford new clothes, right? Afford better food, whatever it might be, or dream of a better life, right? Especially if you are earlier on in your career, you're not sure what your career prospects are going to be, right? Maybe you might have had a difficult background. Maybe you're doing great, in your job, whatever it might be. But the idea of being sold the concept that this is a place where you can get outsized returns and have a real shot at escaping whatever the financial circumstances you're in, that's a pretty compelling narrative, right? And so to push that narrative when the statistics speak to the fact that actually that isn't true, again, that's where I'd say, okay, is that fair, right? When somebody buys a lottery ticket, they know they're buying a lottery ticket. They understand that really there's one winner here, and that's maybe there's 5 winners in the Powerball, whatever, right? But they understand the odds. I don't think that we talk about that the same way in crypto. I think instead there's this focus on really, oh my God, so many people are winning. There's so much money available. In all actuality, that's really not true.
Yeah. Okay. No, that is interesting, because I would say that I feel like people who've been around in crypto, for the most part, tend to understand how difficult it is, but new entrants in particular, especially when things are actually moving, it's not geared in the same way that lottery is, where it's like there's always a couple of winners, there's one big winner, and then there's however many layered underneath it. But when markets are actually running hot like they were, early to mid last year, and from late 2023, there was very much that sense of like, oh, holy shit, you can go throw anything at anything and make money. And if you don't, it's a skill issue and that's your problem. So again, no crying in the casino. But yeah, now I feel like that has very much flipped. As it always does, prices go down and everyone goes like, shit, this is actually difficult. I didn't know what I was actually getting into.
No, and also I would say the difference between investing and something being extractive, right? And that's another concept that I don't think is talked about enough, right? So meme coins generally are extractive. It is a zero-sum game, whereas investing is not a zero-sum game. And I think this is such a key concept that needs to be taken apart, and something that the more it changes in crypto, the better we're going to be, right? So if an asset does not generate revenue or have some type of a basis for generating revenue, whether it's selling a product or a service or holds some other type of an asset, whether it's real estate, etc., then the only value it can have is by being extractive, in that somebody else has to pay for you to pull money out of it. That's the only way there's value there, right? So again, that's a concerning concept. If you're betting against insiders, then that of course means that, well, the likelihood is that even if you invest in this thing, the only way it can go up is that if other people come in and you take the money from somebody else.
Yep.
So and to me, that doesn't sound like a fun game to me. I'm more of the mindset of, okay, let's build something where we're all going to be able to make money because we're building something great, and that great thing is wanted by so many other people, as compared to I know more about this other person, so I could take their money.
Yeah. Well, that's what, like, for a large part, I understand a lot of the things around, because there are certain meme coins that do the community aspect very, very well. And there are people that hold them and they all get together and have a chat and that kind of stuff. But for the most part, I think a lot of meme coins are essentially a Mexican standoff, where everyone's just kind of like, no one else sell, and someone does, and everyone goes, shit. And then you have what you end up with now, which is everyone's fired, and now everyone's like, oh shit. With the meme coin side of things, I think so much of that came from that financial nihilism argument. And it came from this idea of like, well, everything's kind of abstract and made up anyway. we may as well just hyper gamble on the assets that will go up more. Like, I don't want to own Meta or Google and get maybe like a 50% gain in 2 years. If things go really, really well, I want to, 5 million% gain in a month if I can help it. How do you see the financial nihilism playing into this kind of stuff? And this like misunderstanding of what assets are, I think, at a fundamental level.
It sounds a lot like a feeling of powerlessness, and I don't say that in a dismissive way. I say that more out of, like, when I hear people say that, what I hear is frustration, right? Frustration of being, and then this goes back to the generational wealth thing, the idea of escaping. Like, when anybody feels like they're stuck in a situation, there's a lot of different ways to deal with that, right? One way to deal with that is this whole thing is fixed, that it's out of my control, and this is a way for me to get out of it. This being, as you were describing it, a way to play this other game, because it doesn't matter, because the other game, so since the finance game is fixed, I might as well play this other game because I might have better odds here. And the only reason you think you'd have better odds there is because that's the marketing, which is the marketing is you have better odds here because the other game is fixed. And I can say that I think that's a pretty reasonable place for a lot of people to feel that way. I think that it's very often that people feel that the game is fixed, that they're stuck, that there isn't the power to effectuate some type of change, in life. And I wouldn't blame them. I mean, listen, on a very personal level, I grew up. Both my father and my sister are juvenile diabetics, which means their pancreas stopped working when they were children, right? And dealing with illness, I think, is a good analogy. It's not a perfect analogy, but it's a good analogy conceptually for the feelings of frustration. And I'll give you an example. I don't know by where you live if this is the case, but in the U.S. insulin is very expensive, and my sister and my father were insulin dependent diabetics, meaning that if they didn't get insulin, they would die, right? And that then really requires, okay, well, somebody in the family has to have insurance, right? Because if somebody doesn't have insurance and insulin is expensive, then in a lot of ways you're stuck. You are really stuck. How do you then escape that situation of being stuck, right? And it's almost a feeling of, well, insurance is rigged, and then you can go down the route, well, insurance is rigged and big pharma is bad and all of these things, and you can go down. Anybody can go down that route given the circumstances. And then
you end up at like Luigi Mangione level kind of thing. Yeah.
Exactly. Yeah. Anything where anybody feels stuck leads to extremism. Right. That's also how extremists recruit, right? You go to disgruntled, frustrated young people that feel that there is no way out, and then you can make some person an enemy, and then you galvanize them around that idea, and then then they're empowered towards that. And so while it's not the perfect analogy, it in a lot of ways it fits. Right? Well, this other thing is broken. I'm going to escape that system. Here's how I'm going to escape that system. And what that does is it opens the door for people that are con artists, ultimately. And I'm not saying that about any of the cases that I'm involved in, but I am saying that there are a lot of folks out there that are con artists to then exploit those people because they're in an exploitable position. And I'm not saying that everybody's a victim here or this like victim mentality. I am saying that in a lot of ways, it does create a highly exploitive environment. And going back to the extractive idea is that we're not investing here. We're only investing in something, or we're putting money into something where we're taking money from somebody else. And there's really no collaboration there, right? Which I think is concerning because, we talk about innovation in crypto. So where are we going to innovate when the whole idea is I'm going to bring in somebody that I'm going to take money from?
What do you, and this is just like me, this is me bringing up like a pro Memecoin argument, just to get your read on it. What would you say to someone like Murad, for example, has the list of the Memecoins? I think that's not going impeccably well right now. But, he very much takes that line of like, oh no, Memecoins are a community. Like you just have to be more selective with your meme coin purchase. Like, don't go buy any random stuff. Like, you have to buy the right one. I think he went as far as saying that, like, you know, meme coins are essentially like a new form of digital religion, something along those lines. How would you view that kind of argument in this perspective, where, you know, let's assume for a second that everyone's doing this for noble reasons, and they do find some community along the way as well. Because, as you said before, I think crypto is one of those markets where it's very attractive to a person that wants to go out to the fringe. There are lots of returns available if you get in at the right time, and you have a much greater chance at higher returns in crypto if you know what you're doing. And it is well suited to a person that feels as though they are almost in a combative relationship with traditional finance or elements of society where they feel economically excluded from, in a sense of like, well, houses are too expensive and no one's doing anything to help that. Fuck it. I'm going to digital assets where things are very inefficient and I can get big upside for saying where the market's wrong. But bringing that back to the meme coin point, I think the meme coins now have been marketed very well as this element of like, oh no, it's community, it's connection, it's something. It's kind of like NFTs again, but with coins.
I'm glad you brought up NFTs again.
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 NFTs again, but a little more liquid this time. Yeah.
A little more liquid, a little bit less utility, a little bit less narrative, a few less white papers, right? Less storytelling.
Less effort.
Which brings up the question of what were NFTs, right? We go back to NFTs. Let's first say this, that we, you know, not even just post-pandemic, but we live in a world now where communities genuinely exist online. And I think that I think that this is taken both for granted and not appreciated. That these are genuine relationships that exist online, that people, most dating, I remember when people would make fun of dating apps and be like, that meeting somebody on a dating app was a weird thing, right?
Yep.
Now really that's where the majority.
Completely normal. Yeah.
Right. And so communities exist online. These are real relationships. And ultimately, one of our basic needs is to have a community around us. And in that way, many digital communities have come up around that. And the idea of this community narrative is so incredibly important. And again, I go back to one of the exploitive components is the idea of communities, empathy, togetherness, and using that necessarily for financial gain and wrapping up the ability to sell an asset based off of a community where, again, we go back to, okay, everyone here is going to hold. And we saw this with GameStop, right?
Yep.
As it was, but the fact is that the fact that it didn't stop with GameStop, that in actuality that was just the beginning of a larger trend in social behavior. And the same thing happened with GameStop. We're fighting the hedge funds. We are fighting the man. That's what we're doing right now. And there's an incredible inefficiency in this where it's like you might have been fighting one group, one fund, but in all actuality, was there a tangible difference? Did we make global impact here? Well, I would say arguably no, not really. Maybe it changed the way in which certain things were marketed, but this community idea and what you were bringing up with Murad, it just sounds to me like NFTs all over again. And NFTs as an asset class, again, we had a lot of problems with NFTs. Why? Fundamentally, there was not value there, right? If all you needed to do was hire somebody on Fiverr to pump out a white paper and put together, these PFP JPEGs, then it's not about quote unquote the art, right? So it's as if there are these taglines in crypto that we say it's about the community, it's about the art, whatever it's going to be.
Tech. Yep.
Exactly. And it's like, okay, well, is that really true? And again, I've caught in a lot of heat personally, obviously being a litigator representing clients against cases or in cases that are, very popular, and I would say also a part of the fabric of the crypto community. And I can understand why a lot of people felt that way, but my intent is really to push crypto forward in that in order for us to really onboard users, create better tech or use the tech properly, right? There has to be some underlying value. So I'll give you an example, right? I would say what would be an amazing celebrity meme coin community, right? And this goes back to real concepts of decentralization that I think are incredible, right? Depending on how you're developing your token asset, instead of it being something that is highly liquid and that is really being traded at a rapid rate of speed, well, what happens if you put on a trading restriction for 72 hours and then also in your meme coin, you had actual tech built on top of that where you had access to something similar to like a Patreon, right? Where if it was a celebrity or maybe let's say it was a music group, whatever, like say it was a DJ, whatever, right? You're getting first look at their new sets. There's different inclusive communities where there's a chat system developed on top of that, not just on Telegram, pumping the next coin, where we're really creating decentralized communities that are not centralized on a Web 2 asset, right? That to me, that's exciting. So I get excited when I am thinking about, okay, life doesn't exist on Twitter, Instagram, Facebook, etc., but you're actually able to decentralize those concepts because you're using these assets to create decentralized experiences. And that I think is, and then you start creating real value because if you look at it from that perspective, so let's say I created my own meme coin, right? And let's say like I'm a big EDM fan, right? And let's say I'm saying that okay, I'm going on a tour and everyone's collecting my meme coins, my fans are collecting my meme coins. I have an active fan base that's now outside of email, directly contacted with them, can provide all this information to them, can connect fans together so that they can connect and discuss the music. And you can build all of that on top of this stack, right? But that's not what we're doing. We're trading them at an ultra high speed and looking for an edge. So there are these two distinct narratives. So if we're going to talk about the tech, well then let's build some tech and let's build some great products as compared to let's participate in ultra high speed trading and look for a small edge where I'm just extracting value.
Well, I think this is a big thing of seeing celebrities launch meme coins. Even when they did promise utility, it's future utility. It's like, oh, well, we've launched the coin and now we've raised the money. We're going to do this like at this point in time. And sometimes they do, but often it's too late. It's just like, why didn't you wait 6 months to launch the coin with the product already in hand? It's like, oh shit, I've got to go consult some VCs to get some advice on what to do with all this money so I don't end up in a case. I think you can connect the dots as to who I'm talking about. This is something, just even speaking with you today, I kind of realized that like, okay, I think a lot of people on the timeline, particularly in the reaction to this stuff, may have profiled you guys as like, ambulance chasers coming in to try and crack down or, bring regulators into the crypto space in a harmful way. You've kind of responded to that before, but I would like to get like your response to that because I see a lot of that of like, oh no, these guys are just coming in and they're trying to get, the SEC onto our shit again. And I think a lot of people are looking at like, pro crypto SEC or CFTC under Trump, and they're like, oh fuck yeah, finally we're free of Gensler and the whole shebang. So yeah.
So I think there's a real misunderstanding in, let's just say, from the American Constitution generally, and there's a complete collapse of the idea of separation of powers and ultimately how litigation works. Period. Right. First, the SEC is an administrative body, not a legislative body. Right. They're created through legislation, through the 1933 Act. That's where the SEC comes from, and the SEC's job is to enforce regulation, securities regulation, right? So what we saw ultimately in the 2023 and 2024 litigation cycle was the clarification of what would be determined a security under the Howey test. And that is stable law across multiple circuits. What I mean when I say that stable law across multiple circuits is that it is fairly unanimous across the entire United States what is considered a security in regards to digital assets. There is nobody that can change that other than the appellate courts. So unless this goes up to appeal and that decision is changed, then this is already law. This law was established. It's done. Now the SEC may change what cases they choose to take, right? But that's the SEC's decision, right? That's got nothing to do with private civil litigation. Those are two different ideas. That's the starting place. Second is, for us, we really focus on scams, pump and dump schemes, things where we believe consumers have been harmed, right? We're not out here just running around saying we're going to sue everybody in crypto. We have, I would say, a very specific mandate internally as to what we're choosing to pursue. And going a step further, I said this previously, that people were like, oh, Burwick Law, they're a bunch of ambulance chasers. I said, great. You know what? Absolutely, we are ambulance chasers. That sounds wonderful, right? But follow the idea of an ambulance chaser. It's a really interesting concept, right? So an ambulance chaser conceptually is a lawyer that chases an ambulance to a hospital that goes to a person that's been injured, that then helps that person get money back for that injury. Because unfortunately, the way the system is designed is that insurance isn't necessarily going to pay out. That person might be left without any legal recourse or anybody to help them, right? And so if there is such a thing as an ambulance chaser, it came about because there was a need for somebody to chase that ambulance to help somebody else, right? And so what I have found more often than not from so many people that have been victims of a variety of different scams was I felt absolutely hopeless that nobody was going to help me. I sent it to the SEC. I put a report into the FBI. I went to this person. I went to that person. Nobody was listening to me. And because everybody on our team is crypto native, we understand the language. And so you can imagine a lot of these folks going in and trying to explain this to some law enforcement. And it's just exactly, right?
Yep.
So if people are going to say they're a bunch of ambulance chasers, great. Yes, we are helping people that have been injured to go and seek recovery. I am fine wearing that hat. I was a rescue swimmer in the Navy. I guess I was an ambulance chaser then too. So
very solid response. Speaking of, just quickly, you're saying you're a rescue swimmer in the Navy. How did you go from that to crypto law?
A winding road, man.
Yeah,
that's all over the place.
Big question.
I really had considered myself, career military guy. I didn't have the easiest time in high school. I had a lot of trouble learning, and really, when I was in the military, I really taught myself how to read at an adult level. And that sounds so ridiculous as a lawyer, but I genuinely sat there with a dictionary in one hand and books in the other and just read all the time and got obsessed with reading and then got obsessed with learning. And when I was an undergrad, studied political science a lot. At that time, we were still engaged in the war on terror. I had figured that I was going back in and was going to be doing a deployment in the Middle East, studied a lot of Islamic culture. And when I was getting close to graduating, I was big into CrossFit, hurt my back, didn't know what to do, ended up in law school, and I was the first lawyer in my family. And when I was in law school, I just really got obsessed with finance and tech. That was when the Jobs Act came out, and the Jobs Act is referenced by Commissioner Peirce, where she's talking about Reg A and Title II and Title III, which I think is super exciting as far as alternate finance. And when people say they're frustrated by the traditional financial system, I would say that I am too, right? If you didn't go to a school with an H, a Y, or an S, right, then it's oftentimes very difficult to get funding for a startup, right? Banking is fairly difficult to get an investment for anything that's high risk or innovative, right? And these are very frustrating places for people to be in and to raise capital. But Title II, Title III give that opportunity. It's just that we haven't had a liquid secondary market for those types of assets. And I think that tokenization of those assets is really promising. So, that was really my introduction into these types of concepts. And I've spoken about this before, but I had previously run a tech startup in AI before AI became AI, working in mental health. And after I closed that down, okay, well, what's the next chapter of my life going to look like? And I really just combined all the skills that I had brought together over the years. And I said, okay, this is something that was really intriguing. I don't think there are enough lawyers in this space. And opened up the practice. And really right away when I opened it, it was like, okay, this is great. Yeah.
That's an interesting venture.
Yeah.
All right. I do have one final question.
Okay.
This conversation wouldn't be complete without a query on the Dogshit2 token. I know that was in like the evidence docs of a lawsuit, but then, in typical social media fashion, lots of conspiracy theories were then spawned about your involvement in it. Everyone, like, there's a whole subsect of people that are still kind of like pushing the coin, that are like, yeah, no, it's definitely theirs. What do you have to say about how it was made and what it is at this point in time? I can see that you're having a lot of fun processing this question.
No, it's not fun. I think that everything is available in the public domain. The interesting thing about the internet is the internet creates a lot of interesting things, right? I really don't have any comment on that. I think that it's pretty self-explanatory.
Yep. Okay. Awesome. We'll leave it there. Mate, thanks so much for your time. It was really good. It was good to go over everything. I think it was very good to hear your takes around the kind of predatory people that you guys are going after and what Burwick Law's role is in the crypto ecosystem. So, no, thank you.
Yeah. And I got a question for you.
Go for it.
So if you could envision crypto 2 years from now, what do you hope it would look like?
Ooh, that's a hell of a question. Well, it's a weird industry, isn't it? Because it's funny, because I think a lot of the things that I would hope for crypto to succeed in, a lot of it tends to be relatively uninvestable. Like there's a part of me that has like in terms of like, stablecoin adoption, making financial tech easier. It's this kind of thing where it's like a lot of the tech that crypto offers is very, it's kind of like plumbing. It's the kind of stuff that goes into shit and you'd be like, oh man, I'm really glad that that's there. This is way easier. I can send money from this place to this place, or I can use this kind of product without even noticing that I'm actually having to like balance a liquidity pool to fucking move it around. And so I think that there's an element of me that wants crypto, the non-self-interested element wants crypto to be the actual base layer tech, to be involved in things that make stuff easier for everyone.
Yeah.
Ideally, those would be investable assets. But a lot of it is, unfortunately, just kind of like the plumbing that goes into stuff. And I think that's kind of like a thing that people come into crypto with, of like, oh my goodness, this is going to revolutionize the world. And it's like, yeah, if it does, it may not have like an incredible upside for you as an individual, if it does. But ideally, in 2 years' time, I would like to see this place actually make a bit more of a return to there being legitimate technology that people want to use, that is productive, that is non-zero sum. Essentially a move away from whatever the fuck we have going on the timeline right now, which is people pointing fingers, being like, you rugged me, streamers coming in and just like, I feel like it's a bit haughty-taughty of me to just have a crack at the ecosystem, but I do feel like a lot of this is just very... The vibes are not immaculate at the moment, and I would like to see us as an industry move towards something that's not even necessarily more sensible, but just less grifty. I don't mind there being obscure characters and weird shit going on. That's fun. That's what makes it interesting. But it's when the zaniness gets combined with like really predatory activity that shit starts to go down the tubes. So to answer the question, less bullshit, more fun, more interesting use cases, more actual tech adoption, and people creating shit that's done in a way that's fair to market, I think would be probably like the simplest, easiest way out of that question.
So am I stretching it when I say that we're philosophically aligned?
No, not at all. I think so. I may be wearing my Memecoin shirt. I still, there's certain elements of Memecoins that I will stand behind. But for the most part, yeah, like I'd say that we're philosophically aligned. Yeah.
That makes me happy. Seriously.
Dude, I'm really glad.
Yeah.
Listen, man, where can people find you? Where can people keep up to date with what you're doing?
Yeah. I mean, so of course you can find us at www.burwick.law, and obviously Twitter, either my personal Twitter or the Burwick Law Twitter. We are fairly active on there, but those are the places you're most likely to find us.
Awesome, mate. Thanks so much for coming on the show. It was an absolute pleasure.
Thanks, Tom. Thanks for having me.